Jane Fraser, CEO, making her the first woman to run a major Wall Street bank. She faces the challenge that eluded her predecessors, boosting the bank's profitability in line with its rivals. Matt.
Let's take a look at European futures. They have been pointing down, not substantial drops, but 0.2–0.3% on Euro Stoxx 50 futures, as well as FTSE and DAX futures. U.S. futures pointing the other way, so let's see what happens in a few hours trading. In any case, the live trade here in Europe starts now. Let's take a look at the global macro mover screen on your Bloomberg terminal. You've got a slew of risk assets, of asset classes across the columns here. In the far left-hand column, you see the equity indexes, and as they open up, they will populate that screen. So the FTSE is typically the first out of the gate, and it's totally unchanged right now. You may see a lot of these gray boxes across equity indexes at the start of trading. They won't turn green or red until they move substantially away from the zero line. So the CAC 40 is down 0.2%. The IBEX 35 in Madrid is down 0.2%. And the DAX opened early this morning. The DAX down 0.1% as the FTSE turns lower. So European markets not moving a lot, but the movement we do see is to the downside. Global stocks are headed for a second week of losses after the sell-off in the U.S. yesterday continued, highlighting lingering concerns about valuations in certain pockets of the market. Joining us now to discuss is Kurt Custard. He is the Chief Investment Officer at Newton Investment Management. And Kurt, I wonder what you think of this downturn. It's starting to look like a route with legs. Do you think it's going to continue?
Well, I think we're probably going to see continued volatility throughout this fourth quarter. We're going to be in a position now where you have an election, you have trade tensions, and you have high valuations, and all those things sort of lend themselves to increased corrections and increased movement in the markets. That said, I think it's probably a healthy one. Valuations in tech shares were getting a little stretched. Everybody was piggybacking on the same kind of names, and the last time this happened was 99, and that didn't end so well.
Kurt, good morning to you. Can sell-off in tech be any kind of risk-on signal? Maybe we have to divide tech into a couple of different or a few different baskets. But some tech will do badly when a vaccine is discovered, for example. So tech isn't the whole market story, the whole sentiment story at the moment, is it?
No, you're absolutely right. I think there's sort of two ways to think about tech. One is on a strategic or a thematic perspective, and the other is really reacting to the circumstances due to the virus. Clearly the world is going to rebound, after a vaccine is developed, and you're going to start to see some return to normalization. That said, there's a lot of underlying trends now that have either been accelerated or created because of the virus that are likely to persist. So if you think about online schooling as an example, I think online schooling is now going to be a mode of schooling for an increasing number of young people. It's going to continue telemedicine is going to continue. So all of these kind of tech things are likely to persist. So I do think you have to sort of figure out what's going to mean revert when you have a vaccine, and those trends that are going to continue for some years to come.
I want to pivot away to the ECB for a second, Kurt. We're getting a lot of headlines out of this informal ECOFIN meeting here in Berlin, where we see the finance minister for the Netherlands speaking, talking about nominating Frank Elderson to the ECB board. But probably more interesting is comments that we're hearing from Governing Council member Villeroy, who is saying that the ECB doesn't target the exchange rate. That's clear. That's what central banks say. But then he says the exchange rate does matter for inflation and monetary policy. So shouldn't they be targeting that exchange rate a little bit more, even if it's kind of sub rosa, Kurt?
I don't think they're ever going to come out and say they're targeting an exchange rate as part of monetary policy, because there's too many things that move an exchange rate for them to be effective in doing it. They'd be setting themselves up to fail. However, the exchange rate clearly does impact inflation and clearly does impact the ability for countries to be able to export their goods. So it is a important part of the overall monetary policy condition. It's just, I don't think that they would say, hey, we're going to target a weak euro or a strong euro explicitly. The only country that has tried to do that was back in the day was Japan, and that had some very mixed results because I think the marketplace got pretty used to when they would intervene.
And Kurt, part of what the ECB is having to deal with is what the Fed has already done. The Fed perhaps moving ahead of the ECB in terms of setting out, certainly in terms of setting out its future strategy, and certainly that has been part of what has led to dollar weakness and euro strength. Looking ahead to the Fed, then this will be, I think, the last meeting before the US election. What are we expecting to see from the Fed? Anything substantial? Any detail on what they told us in Jackson Hole?
Probably not ahead of an election, especially one that is as partisan as the current election is likely to be. I think that the Fed policy has been pretty clear. They want to pump a lot of liquidity in the marketplace, and at this point, they're telling the markets they're not so concerned about the inflationary outturn that generates over the near term. The challenge that they have with this approach is, A, they're starting from a point where CPE is considerably below their target, so it sort of raises the question about why they made the announcement in the first place. And then secondly, when you say you're going to allow inflation to be above target for a length of time, that's very ambiguous. I mean, marketplace wants certainty. Are they say that they're going to allow it to go to 5%? I mean, that would be, exceptional. And for how long? So I think that the marketplace, especially fixed income, is going to have some volatility coming to it, next year if inflation starts to develop.
What inflation or what safe haven plays do you see working out well? Because they've been a little bit iffy recently, Kurt, and we've seen them run up against ceilings, so to speak. So do you think people are going to start pushing gold over 2,000? Is Bitcoin going to come back? Is the yen going to get stronger as the dollar weakens?
Well, it's sort of in order there. I think the gold argument is something that, my team has gotten completely right, and I still remain a little bit, perplexed by it. I can never split out what is a momentum trade and what is an inflation hedge in gold. So it's tough for me to have a strong view. I don't have a strong view on Bitcoin. I think Bitcoin is a bit of a side bet. And until it becomes a really functioning way of exchanging value for Joe Public, it's not really a real alternative currency. I do think the yen is likely to strengthen, and I think that the excess liquidity that the Fed is pumping into the global monetary reserve system is material and should weaken the dollar versus most of the majors in this environment. As for how you find protection there, that's a great question, and I think it's a function of what the Fed is going to do. If we start to see inflation and the Fed does not react by raising short-term interest rates, you're going to see a very, very different marketplace environment than if the Fed does react. And that's why the Fed's announcement was so important.
Kurt, thanks very much. Stay with us. Kurt Custard, Newton Investment Management CIO, sticks with us a little bit longer this Friday morning on the programme. Coming up, the EU gives the UK an ultimatum: scrap the internal markets bill, risk legal action. The latest on the Brexit talks is next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We're having an informal Euro group meeting. I don't know why he's wearing a tie. In any case, Bruno Le Maire there, the French finance minister, talking about the impetus needed post-crisis for the Euro area budget. So obviously an incredibly important thing. He's talking about banking union as well as capital union and the budget needs. I'm going to head over there in just about an hour or 2 hours time and interview the Portuguese finance minister. But there's, suffice it to say, a lot of news coming out of this ECOFIN Eurogroup meeting, especially surrounding not only the crisis, but Brexit as talks seem to fall into turmoil. Let's get the Bloomberg Business Flash right now. Top corporate stories from the terminal. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. President Trump says he won't extend his deadline for ByteDance to sell TikTok's US operations. He told reporters the app would be banned if a deal is not agreed by September 15th. Separately, sources say ByteDance is looking to make Singapore its beachhead for the rest of Asia, spending billions of dollars and creating hundreds of jobs in the city-state. Rio Tinto's CEO is stepping down amid concerns over the destruction of Australian Aboriginal heritage sites. Jean-Sébastien Jacques came under investor pressure to step up its response to explosions that opened up a mining area at the 46,000-year-old site, which archaeologists say are among the most significant of their type in the country. Jacques will remain in his role until the end of March next year if no successor is appointed before then. JP Morgan is requiring most of its senior sales and trading employees to return to the office by September 21st. A source says the order applies to managing directors and executive directors who oversee subordinates, but those with childcare or health issues are exempt. It's the strongest move yet by a US bank to restaff its workplaces. Volkswagen MAN truck maker plans to cut as many as 9,500 jobs, almost a quarter of its workforce. The company could also close 3 factories in a bid to improve earnings. Increasing MAN's profit margin is key for its parent Traton, so the division can finance investments in new technologies like electric trucks. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura Wright in London. Now, the UK and the European Union are heading for a chaotic split without a new trade deal. The EU has threatened to take legal action if a proposed bill which aims to water down the Brexit agreement isn't scrapped by Boris Johnson by the end of this month. His government has rejected the request and says it won't back down. Kurt Custard, Newton Investment Management CIO, is still with us. And Kurt, really interested to get your investor perspective on market assumptions here, or the base case here, because increasingly we do talk to guests who suggest they are increasingly deciding that no deal is the most likely outcome here. What kind of percentages do you attach to the various possible outcomes?
Well, certainly the no deal percentage has gone up substantially, and the brinkmanship is getting pretty extreme as we roll into the deadline. I think more importantly than that, I'm not so sure that the marketplace has effectively discounted a no deal in terms of what's going to impact both cable and the FTSE. You know, COVID has garnered all the airspace and all the headlines around the world. And so the Brexit, which certainly dominated things here in London for a very, very long period of time, has sort of slipped off the radar screen. And I do wonder how much people are paying attention to it. You know, that said, if the government at this point is not prepared for a no deal outturn, they should be tossed out, because we've been talking about this for a really long time.
How bad will a no deal be for British business, for the British economy?
It depends on the time frame you put it into. I mean, I think certain sectors of the economy could get hit pretty severely over the short term, and that certainly is going to garner the headlines against a backdrop of economic weakness associated with the virus. That said, you know, over the long term, I don't think this is material. I think, you know, Britain remains a very innovative economy, more innovative than many of the continental European economies. And as such, I think that, you know, it will rebound over the long term to be able to go to, you know, greater economic heights. But that is the long term, and politics rarely is the long term. It's typically the short term. So I would suggest that the short term shock against, again, this backdrop of weakness due to COVID, you know, could be significant in some sectors.
Kurt, what do you make of moves then that have weakened the pound? We've seen a bit of that, but one guest we were hearing from earlier on the Daybreak program was talking about how we could go to 110. We're at 128.35. She was talking about 110 on a no deal. That's still quite a substantial weakening from where we are. How do you anticipate that the pound moves as we head towards the end of the year?
That's a tough one. I mean, you're caught between the prospects of a no-deal Brexit, which is clearly bad for the pound, but also, as we talked about earlier, this excess liquidity going on by the U.S. Fed. So in terms of cable, I have less of a strong call. There will be a knee-jerk reaction for the pound to weaken pretty dramatically. But in terms of where it would be 6 months from now, that's a much tougher call. I can say that in perspective of a no deal, that the pound should weaken versus the euro, though, and I would expect that to persist.
So you see, I mean, do you see parity there? Is a euro worth a pound?
Do I see parity there? Maybe in a short-term basis, probably not long-term. As I said, I think there are greater prospects for economic growth out of the UK over the long term, probably than I see in continental Europe. So I would expect that sterling would recover.
One of the big concerns for the UK also is around the handling of the virus, Kurt. What are you anticipating for Europe and the resurgence of the virus that we're seeing in the UK and in continental Europe, and what that does to these economies through the winter? What are you bracing for?
Well, that's the $95 billion question. To the extent to which the virus reasserts itself during the cold and flu season, and how governments respond to that is going to be critical for economic growth going forward. So, you've seen various countries take varying different approaches, some of which were very successful early on. But, whether the economies can withstand another extreme lockdown is a real genuine question mark. I think here in Monday, we're going to have further restrictions placed here in the UK because they're seeing an upsurge in cases. That's going to continue to dampen, modestly, but dampen economic activity across the UK. And any further restrictions as we roll into January, February of next year, when you have cold and flu season at its peak, that's the real question mark. And so it's a very, very tough call. I think everybody's watching the vaccine trials very, very closely, because the longer that stuff gets delayed, the more economic damage that's done.
All right, Kurt, thanks so much for your time this morning. Really appreciate you joining us and sharing your insight on these volatile markets. Kurt Custard is the Chief Investment Officer at Newton Investment Management. He's going to continue the conversation with us on Bloomberg Radio as well. That's at 9 a.m. UK time. So if you want to tune in to that, go ahead and switch off the TV, turn on London DAB digital radio, or you can type probably Radio Go on the Bloomberg terminal. Coming up, addressing gender diversity, Jane Fraser to become the first female CEO of a major Wall Street bank. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 21 minutes into the session, and we're now looking at a market that's turned slightly higher, with the FTSE up about 0.25%, even as the pound gains against the dollar. Let's take a look at your individual movers. For that, we go to Danny Berger. Danny?
Matt, the biggest mover on the Stock 600 this morning to the upside is Altice, a take private for the firm from their founder and majority owner, Patrick Drahi. His company is called Next Private. The offer price for this is €4.11, so it's trading just a bit above that, but at a 26% gain. This is the biggest share increase on a daily basis in about a year for the company. Next, we have Arista gaining 16%. Not a great story to follow if you are feeling hungry this morning. They sell a lot of frozen baked goods, cookies, things like that. Well, they've had a pretty tough year, down 40%, and because of that, they've had a lot of takeover interest from PE funds, other companies, but the latest we've heard from is Paul Singer's Elliott Management in advanced talks with the companies for an all-cash tender offer of shares outstanding for the firm. Now, finally, we have Knorr Bremse, its biggest daily decline on record. That's after a new share offering from Germany's third richest person. That's Heinz-Hermann Thiel, offloading about 10 million shares of the company. He's going to use that 1.2 billion euros in proceeds to help fund some of his other investments. Matt, Anna?
Thanks very much to Danny Berger with the latest movers on the market, and there are some, aren't there? Now, Citigroup has named a new CEO. Jane Fraser will become the first female to lead a major Wall Street bank, succeeding Mike Corbat, who's retiring in February after more than 8 years in the top job. For more, let's bring in Tom Metcalf, Bloomberg's finance reporter, who joins us now. Tom, what does the appointment say about how far Wall Street has come then on gender issues?
Well, you know, it's definitely a sort of a historic moment for the finance sector. As you said, she's the first woman ever to run one of the giant U.S. banks. So in some ways, there is that breaking of the glass ceiling, I suppose. But, you know, from another angle, you know, it's 2022, and the fact Jane Fraser is the first CEO of a major bank probably tells its own story. You know, and when you look at the wider finance sector, you know, it remains very male-dominated. You know, some diversity statistics quite hard to come by, but it seems that about only a quarter of the industry is either female or from minority groups. So while this is definitely a moment, it's really just the first step, I suppose.
And I'm sure, you know, she wasn't chosen, and we don't want to make it sound like this, because she is a woman. She has a ton of experience, from Goldman Sachs to McKinsey. Tell us about her history, her bio.
Oh yeah, it's an impressive resume. I mean, it's almost like she's been at every top firm. So, born in Scotland, as you say, she started at Goldman Sachs in their M&A team, moved over to McKinsey, became a partner, and then joined Citi in 2004. And then, if you think she's been there ever since, 15 years, kind of helping it get through the financial crisis where it was hit very hard. And you know, I think internally, everyone sort of saw her as the you know, the probable replacement. So no, fully deserved, but yeah, she's definitely taken on a big challenge.
And yeah, and there's going to be some challenges ahead, aren't there? I think we've got a chart that shows how the share prices performed under various tenures, with Michael Corbat in the white, Vikram Pandit in yellow, Chuck Prince in the purple, and Sandy Vale in the green. We'll try and get that up for viewers. But what are the challenges that then she's going to face coming after all of these other CEOs?
Yeah, well, obviously, like any big financial bank, it's very difficult times. So, for one, she's going to take over at a time, you know, people are still trying to work out what on earth is going on with the pandemic, you know, what that means for loan losses. And then, you know, specifically for Citigroup, when you compare it to the other big Wall Street banks, it is somewhat undervalued. So its book value is, I think, about 0.6. You know, you compare that to the top performer, Morgan Stanley, where that's over 1. So, you know, investors are looking at this and hoping she'll be able to boost profitability and also kind of hopefully avoid some of the scandals that have dogged Citi, not least the one recently where they accidentally sent $900 million to hedge funds. So, you know, Citi is definitely not a basket case. You know, her predecessor did a good job of kind of boosting it from pretty low point, but there's plenty of room for improvement.
Yeah. Yeah, Sheila Bair even said that, you know, Corbett has made it a better bank. Tom Metcalf, thanks very much for joining us. Tom Metcalf is Bloomberg's finance reporter. Up next, we'll talk about the changes in the C-suite at Rio Tinto.
Welcome back to the European Market Open. 30 minutes into Friday's trading session, and things looking more positive than perhaps the futures had suggested they would be. So we are seeing some gains for European equity markets. US futures had pointed to the upside through much of the Asian session, but Europe slipping lower and then catching up with those US futures. So Nasdaq futures up by 1.3% right now. But mind you, they were strong in the early part of the session yesterday on Wall Street and then slipped in the latter part of the US trading day. We'll keep an eye on those though. Now, let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. Europe has overtaken the US in terms of new coronavirus infections. The EU, Norway, Iceland and Liechtenstein reported more than 27,000 cases on Wednesday, compared to just over 26,000 in the US. The region has re-emerged as a global hotspot after bringing the pandemic under control earlier in the year, with resurgent infections in countries including Spain and France. The odds of another round of US fiscal stimulus have dropped. Senators blocked a Republican proposal for a slimmed-down support in the region of $500 to $700 billion. Democrats are looking for $2.2 trillion. Minority Leader Chuck Schumer told reporters he hoped the result would prompt GOP lawmakers to come back to the negotiating table. The UK economy surged in July. GDP rose 6.6% from June as coronavirus restrictions eased. Britain has clawed back a little more than half of the output lost during the lockdown, but a triple threat of mounting job losses, rising virus cases, and the risk of a messy Brexit mean recovering the rest may prove difficult. England's football teams take to the field this weekend for the start of the Premier League. The first match will be Fulham versus Arsenal on Saturday, but it's still unclear when spectators will be allowed back. CEO Richard Masters says he hopes there will be a small number by October, but without fans, he sees the world's richest football competition taking a hit of about £700 million. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Thanks very much, Laura. Laura Wright here in London. 32 minutes past 8 here in the UK, and Brexit trade deal talks are set to continue next week. That's despite the UK rejecting the EU's ultimatum to scrap plans to override the withdrawal agreement. The EU has threatened the UK government with legal action if it does not ditch its controversial internal markets bill by the end of the month. This bill addresses the Northern Ireland Protocol, an element of the Brexit withdrawal agreement designed to prevent a hard border returning to the island of Ireland. Joining us now, I'm pleased to say, is Aidan Connolly, Northern Ireland Retail Consortium Director General. Aidan, good to have you with us on the programme. The businesses you talk to, that you represent, that you have dealings with, are they now increasingly preparing for a no deal on trade outcome at the start of January? Is that what businesses in Northern Ireland have to be prepared for now?
Well, it's something that's a lot more likely than it was at the start of the week. What the government has been saying and what they're trying to do with the internal market bill is to, as they say, provide legislative certainty, but in turn that creates business uncertainty and legal jeopardy, which simply isn't good enough. We need the UK and the EU to keep their eyes on the prize to include that free trade agreement that's as comprehensive as possible, because that'll remove the frictions and costs for business in Northern Ireland.
I wonder if there's really a possibility of one side or the other putting up a hard border. I mean, wouldn't neither side want to provoke with such a move? It seems like, the dumbest thing you can do if you want to avoid violence.
I think that's where there's been a lot of trouble with the whole Brexit question when it comes to Northern Ireland. This, instead of being a question about trade, has become a question about the Constitution. It's been a question about the Good Friday Agreement. What we're really concerned about is it doesn't matter whether you're in Northern Ireland, in the south of Ireland, or in Great Britain. Paying billions more pounds in additional tariffs is not good news. Specifically in Northern Ireland, our households, our families here, have half of the discretionary income of British households. That means that they cannot afford any of these cost rises. So the Northern Ireland Protocol that is in place with the withdrawal agreement, it's not perfect, but it averts some of the worst consequences of a chaotic non-negotiated outcome or a no deal. If there is that no deal, then the spectre of a border on the island of Ireland raises again. But more importantly, the cost rises that would come from that would be hugely detrimental to the most vulnerable people economically in our island.
Aidan, the UK government suggests that one of the reasons it needs to disrupt the Northern Ireland Protocol is to deliver what it describes as unfettered access from Northern Ireland to GB. Was your assessment and the assessment of your members that the protocol did offer unfettered access?
No, there's a lot of problems with the protocol, like I said, and what we have been doing over this past 8 months is try to work with the UK government to help them bring forward technical solutions, those mitigations that will be needed, and also ask the EU for a generosity of spirit to allow derogations, to allow those mitigations to happen. For example, we've been talking about what's known as the supermarket solution. That means that we can prove that goods are going only to stores in Northern Ireland. They will not be at risk of going into the EU or the Republic of Ireland market, and therefore they shouldn't have things like tariff, customs checks, VAT checks, or even SPS, those checks on products of animal origin, which will help us keep costs down and allow us to continue to give Northern Ireland consumers affordability. So for us, there's still so much to do in very, very little time.
How much time do you actually need? I mean, clearly, in the negotiations, everything comes down to the wire, down to the very last minute. But you need, obviously, lead time in order to get the rule book, read it, implement what you need to. What kind of lead time do you think you need?
Well, you've put that very well, and I suppose one of the problems that a lot of people don't understand is this isn't linear. There's a lot of things that need to happen at the one time. The timescales for some things have already passed. So usually, if we were making changes to labels, they would be signed off in August, started to be printed in September. You're talking about millions of labels, and then they would be ready for the 1st of January. That deadline is passed. The more you have to speed things up, the more it costs. Quite simply, the timescale that we have now for whatever the new regime looks like is nigh on impossible. Business doesn't have the bandwidth or the financial capacity to deal with this change. You got to remember, we are still dealing, especially in the retail industry, with the effects of the COVID pandemic, how that's affected consumer spend, how that's affected supply chains, and we're still not out of that yet.
What if we end up on WTO terms, Aidan? What would that do to trade between the North and the Republic?
The North and the Republic, well, there's the question, obviously, about how that trade would actually be facilitated. Would the UK and therefore Northern Ireland be on the third country list? There would be lots of products that wouldn't actually be able to move. But it's not just about buying and selling, it's about processing as well. So, for example, over a third of Northern Irish milk goes to the Republic of Ireland for processing and then comes back. You can have lots of different products. A bottle of Bailey's will cross the border 5 times before it becomes a finished product. Something as simple as a cottage pie will have 8 border movements, north, south, east, and west, because of the different ingredients that are in it. What we're talking about here is an unknitting of a fundamental unknitting of an economic process that we've had not since 20 years of the Good Friday Agreement, but 40 years of being part of the EU, and that's really hard to do.
Yeah, absolutely. Very integrated supply chains. Aidan, thank you very much. Aidan Connolly, Northern Ireland Retail Consortium Director General. Thanks very much for joining us with that perspective. Up next, Rio Tinto CEO is stepping down after investor pressure over the destruction of an ancient Aboriginal site. More details next. This is Bloomberg.
Good morning, ladies and gentlemen. I'm placing an order to buy Japanese yen at 106,173. Order placed to buy Japanese yen at 106,173. And position is opened. Okay, let's see where it will lead us.
Welcome back to the European Open. We are 41 minutes into the trading day and looking at kind of a mixed picture here with the FTSE rising just 0.1% as the DAX falls about a quarter. Rio Tinto CEO Jean-Sébastien Jacques is stepping down after an explosion to open a mining area destroyed a 46,000-year-old Aboriginal site. That comes amid mounting pressure from investors for the mining giant to step up its response. Marsha Langton from the University of Melbourne said Rio's corporate culture needs an overhaul.
That will give the company room to now do what is the most important course that they should take, and that is to find the right person to rebuild the internal culture of the company so that the company does not continue to destroy important Aboriginal sacred sites and treat traditional owners, Aboriginal traditional owners, and Australians in general with the contempt that Jean-Sébastien Jacques and Simone Niven have.
For more, let's bring in Bloomberg Daybreak anchor Anne-Marie Hordern and commodity enthusiast. Anne-Marie, walk us through what happened here, because JSJ just had, 2 weeks ago, support from the board to stay.
Yeah, that's right. But clearly the investor pressure was mounting, and they didn't like the way the board had originally dealt with the matter. And it's not just the CEO that's going. It's the head of the iron ore department as well, and the head of corporate relations. So really it's a big shakeup at Rio Tinto. And this all stems from what happened earlier in the year. And this was a blast that was near the Australian Aboriginal sites in Australia, and investors really criticized how they had originally dealt with that situation. So this is the backlash of that destruction. It was rock shelters. They were used by Aboriginal Australians for cooking and shelter as long as 4,000 years ago. But really the big takeaway is that ESG, environment, social, governance, this is just not nice to haves anymore as part of corporations. Investors really care about it, and you can see given the amount of pressure they placed on Rio Tinto.
Anne-Marie, thanks very much for the update. Bloomberg's Anne-Marie Hordern with the latest on Rio Tinto. Let's get a Bloomberg Business Flash, some of the big corporate stories that we're tracking here at Bloomberg. Here's Laura Wright.
Thanks, Anna. President Trump says he won't extend his deadline for ByteDance to sell TikTok's US operations. He told reporters the app would be banned if a deal is not agreed by September 15th. Separately, sources say ByteDance is looking to make Singapore its beachhead for the rest of Asia, spending billions of dollars and creating hundreds of jobs in the state. JP Morgan is requiring most of its senior sales and trading employees to return to the office by September 21st. A source says the order applies to managing directors and executive directors who oversee subordinates, but those with childcare or health issues are exempt. It's the strongest move yet by a US bank to restaff its workplaces. Volkswagen MAN truckmaker plans to cut as many as 9,500 jobs, almost a quarter of its workforce. The company could also close 3 factories in a bid to improve earnings. Increasing MAN's profit margin is key for its parent Traton, so the division can finance investments in new technologies like electric trucks. That's your Bloomberg Business Flash. Matt, Anna.
All right, Laura, thanks very much. Laura right there in London. With your news. Up next, we're going to be talking about what happens when you're caught between stimulus and the virus pain. European stocks have been trapped in a tight range since June. Is there anything that can break the impasse between the bulls and the bears? This is Bloomberg.
the moment, we hope that the virus isn't spreading too heavily again, and that we can reach a little bit better situation than was prospected in spring. We estimate the GDP downfall in Austria for approximately 6.8% for the whole year 2020. And if there's the perspective of a vaccine for next year, I hope that will be a sharp rise in GDP next year.
And does the virus affect your deficit and debt target estimates?
Well, it definitely affects the deficit. Without the coronavirus, the Austrian public debt would have dropped to approximately 69% of GDP this year, coming from 85% in 2015. So we did quite a good job in lowering the debt ratio. But now it's going to increase to something between 80 and 90% in the next 2 years. But on a long-term perspective, we are convinced that we can lower the debt ratio again.
And how are you dealing with the budget? And if you are planning reform for companies, we heard about a structural reform that should change the chance for the shareholder to enter in even in companies. So getting off some old shareholders like family business or foundations. Is this reform going on?
Well, what we tried to do, of course, is first of all, the priority was to save human lives. Then this was the reason why we did the lockdown. And of course, this had severe effects on the Austrian economies, on small and medium enterprises and so on. So we implemented subsidies for the Austrian businesses in a very large extent. Altogether, we are going to spend 50 billion euros, which amounts to approximately 13.5% of Austrian GDP, which is one of the largest packages within the European Union. And now we have to make sure that this money also reaches the companies. And at the moment, there are some conflicts with the European Commission because they don't agree on what we try to do to help our companies. They say it's not within the framework for competitiveness. But from my point of view, we have a crisis. Austrian taxpayers invest a lot of money, spend a lot of money because we show solidarity with Italy, Spain and France, and vice versa. We would like to be able to support our own businesses with our own taxpayers' money.
How many companies will have liquidity problems in 2001 and in which sector, as you talked about?
Well, the Austrian tourism branch is quite severely hit. Tourism accounts for a large amount for the Austrian GDP. It's mainly run by small and medium businesses, by family-owned businesses. For the moment, there are no bankruptcies because we gave the opportunity for tax deferrals, but we'll see how this will catch up next year. Therefore, it's even more necessary that we subsidize those companies, because those companies that had no problems before the coronavirus, we have to save them for after the crisis.
And I didn't say before, but one question was on banks. In Austria, you have a kind of wild card case bank. The Commercial Metresburg was not a huge, but something a scandal, was a fraud. How are you dealing with that? And how do you want that this don't not repeat again?
Mm-hmm. Well, first of all, the Commercialbank scandal was a corruption case, a crime, obviously, and it was a small regional bank. What we're trying to do now is evaluate together with the officials what we could do on a national level to prevent such a case to happen again. These investigations are ongoing.
That was the Austrian Finance Minister Gernot Blumel speaking exclusively to Bloomberg at the informal Eurogroup meeting a little bit earlier on this morning. That's been taking place in Berlin. European stocks have been trapped in a tight range then since June. Is there anything to break the impasse between the bulls and the bears? Let's talk to the Markets Live team and to the Markets Live editor, Heather Burke, who joins us now. Heather, really interesting to look at a chart very simply of what European stocks have done or have not done during this whole period of summer where we've been kind of caught up talking about US tech so much. And through all of that, Europe stays range bound. Is there anything that you can see that breaks that narrow range?
Good morning. Right now, we've got stimulus and euro area fiscal unity as a tailwind going up against an increase in infection numbers and a sputtering of economic growth. And European stocks have also been held back because they haven't had that tech momentum that the U.S. has. Right now, the biggest thing would be to see a real rebound in economic growth, vaccine hopes. Another global stock rebound would maybe be some of the biggest things that would help European stocks break out of that range.
I agree that the, seeing this chart, Heather, was fantastic in your piece because it felt to me like stocks were just going up, 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 and then over the last 2 weeks have been coming down, down. But the range has been so tight, and it made a big difference to see that. How much, what pushes this around? Is it the infection numbers? Does that make a difference to traders? Is it the stimulus? What are the key, movers on a benchmark that doesn't have these huge tech high flyers?
If you look by country, the German stocks have outperformed, and a move toward and some outperformance of cyclicals, unprecedented German stimulus has definitely helped them. If you look on the other end of the range, Spanish and UK stocks have underperformed. Spain has been really hit by travel quarantines. Its economic has lagged other euro areas, and also they've been hit by rising virus cases more than some other countries. So you have different plays, and in some cases it's a country-specific thing, but when all these factors come together, you really have European stocks in this tight range. And while it's less, while they haven't risen as much as the U.S., they haven't been as volatile either.
Heather, thanks so much. Markets Live editor Heather Burke, thank you very much for joining us. And Matt, I was just going to say that European equity markets have slipped back to the flat line, but US futures, the NASDAQ futures point higher. Maybe I should care less about that, given what we just discussed with Heather.
Yeah, absolutely. And I mean, Heather's piece says, European stocks closed the week with a small drop. I think small is the key word.
I am placing a stop on profit for Japanese yen at 106,193. Stop on profit for Japanese yen at 106,193.
Heading for a chaotic split, the European Union is giving Boris Johnson until the end of the month to back down on his controversial Brexit bill. A crack in the glass ceiling, Citigroup names Jane Fraser chief executive, making her the first woman to run a major Wall Street bank. And exits at Rio, the miner's chief executive and other senior figures are to leave amid pressure over the destruction of Australian Aboriginal heritage sites. Good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Happy Friday, everyone. It feels like a long week, but it's also the first week of September. So let's look at the markets. Let's take stock of what's been happening and what we heard from the ECB yesterday. Now, first of all, futures are climbing. European stocks are pretty much flat. We did have a mixed week overall. There have been concerns over valuations in some pockets of the market that whipsawed global equities. I'm thinking especially of technology stocks. And then the other big question, of course, is what happens to euro. On Thursday, Christine Lagarde, the president of the ECB, spurred a rally in the euro when she delivered relatively mild comments on the currency surge. And then pound headed for the biggest weekly drop since March as Brexit talks frayed. Now let's get straight to the Bloomberg First Word News. Here in London is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Europe has overtaken the US in terms of coronavirus infections. The EU, Norway, Iceland and Liechtenstein reported more than 27,000 cases on Wednesday, compared to just over 26,000 in the US. The region has re-emerged as a global hotspot after bringing the pandemic under control earlier in the year, with resurgent infections in countries including both Spain and France. The odds of another round of U.S. fiscal stimulus have dropped. Senators blocked a Republican proposal for slimmed-down support in the region of $500 to $700 billion. Democrats are looking for $2.2 trillion. Minority Leader Chuck Schumer told reporters he hoped the result would prompt GOP lawmakers to come back to the negotiating table. The UK economy surged in July. GDP rose 6.6% from June as coronavirus restrictions were eased. Britain has clawed back little more than half of the output lost during the lockdown, but a triple threat of mounting job losses, rising virus cases, and the risk of a messy Brexit mean recovering the rest may prove difficult. And England's football teams take to the field this weekend for the start of the Premier League, but it's unclear when spectators will be allowed back. CEO Richard Masters says he hopes there'll be a small number by at least October, but without fans, he sees the world's richest football competition taking a hit of about £700 million. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
I am moving further. Stop and profit for Japanese yen to 106.203. Okay? Stop and profit move to 106.203.
It's up to the British government to re-establish trust between the two sides.
Well, indeed, the bill was very seriously damaging trust between UK and the EU. And so what we are stressing now is that it's up to the British government to work to re-establish this trust. And time is running because our assessment is that either we reach this agreement within 1 month from now. You know that the formal deadline is the end of the year, but to have an agreement, we need to have a decision taken at the beginning of next month, beginning of October. So the re-establishing of trust, which means the changes in this bill that was introduced in recent days, is of essence, and it's very urgent.
If the UK does not back down, will there be a hard Brexit?
Well, as we always said, this is not the European proposal. This is not the European will. This is not the solution that we envisage. But you need two parts to have a deal. So if there is not any seriousness in respecting the agreement that we're on the basis of the negotiation that is now going on, I think things will get very difficult among the EU and UK. We are not working for this, not at all. We are not working for a hard Brexit, but we need to have a trustful partner to have a deal.
Commissioner, we heard today from the ECB that they revised upwards their 2020 forecast, but they see the stabilization of any rebound next year. What's your assessment of the European economy right now? What letter of recovery are we in?
Well, we are, in general, with a similar analysis of the one of the ECB. Our evaluation, we will have our winter forecast beginning of November. Our evaluation is that we had a rather fast recovery, especially in June and July, but perhaps according to high-frequency data and new granular data, this speed of the recovery slowed down in recent weeks in August. So I think we still have in front of us uncertainty around the strength and the speed of recovery. And our task is to reinforce confidence in the markets, in the citizens, and in the business community. And this is what, with our recovery plans, we will try to do in the next weeks, because uncertainty is still there, and we are not sure of the speed of the recovery which is underway.
Well, that was EU Commissioner for Economy and Finance, Paolo Gentiloni, speaking exclusively to our Guy Johnson and Alex Steele. Now, joining us this morning is Andrea Iannelli. He's Fixed Income Investment Director at Fidelity International. Andrea, as always, thank you so much for joining us. I have like a million questions, but let's start with Brexit, because after the summer lull, it's kind of like back and something that we really need to focus on. What does it mean for your world? Are there opportunities in UK assets?
There are, and so first of all, the Brexit spat that we've seen re-emerging now is is part of broader issues that we're going to have between now and the end of the year. It's one of the multiple political hurdles that and risk events that we have in the calendar. Now, for UK assets, in general, fixed income assets, credit, and risky assets overall have done really, really well since the middle of March. We have started trimming down a little bit of risk around the edges. We're still positive on UK assets and UK fixed income overall, predominantly because of the very strong support that the central banks in general are providing to the market, which is in a way sort of disjoining market behavior from underlying economic fundamentals. But if you take into account what we're seeing with Brexit, as well as the fact that we are going to see unemployment rising in the UK and in developed markets more broadly as employment support schemes kind of roll off, it's likely that we're going to start seeing some bad news creeping in through the numbers, and that kind of makes us a little bit more cautious than we were early in the year.
A little bit more cautious because you haven't yet figured out, Andrea, whether this is actually a negotiating tactic or whether we'll have a world trade, WTO agreement come January?
Well, no one really knows really how that negotiation will go. So on the basis of valuations and on the basis of the likely volatility that we're going to have going forward, it's reasonable to just take some chips off the table and sort of lock in some of the good, strong performance that some of the assets in the risky asset space have had since the middle of March. Volatility is still going to be with us, and that will in itself be an opportunity. to add back to those positions at perhaps better levels.
Andrea, where do you see the biggest value? We'll talk about the ECB shortly, but if you look at the fixed income space, is there something that at the moment looks like it could be a good deal?
So there's a few areas which I think are worth highlighting. In general, we are going through what is not too similar to what we've seen in Japan in the 90s. You know, central banks buying a lot of debt, government spending increasing, consumers and savers just saving more. Now, this saving needs to go somewhere. It needs to find a home. In areas like some areas of the high yield market, like European high yield, and Asian fixed income, with Asia being the sort of first in, but now first out of the COVID crisis, and some areas of emerging market debt still offer value because they're still far from the tights in terms of spread where they were before the crisis. And flows into those asset classes confirm this dynamic is at play. Clearly, valuations they're not as cheap as they were early in the year, but opportunities are still there in our view.
Thanks so much. Andrea Iannelli there from Fidelity International stays with us. Now, coming up, as New York prepares to mark the anniversary of the worst terrorist attack on American soil, we'll speak to Tom Michaud. He's chairman and chief executive officer of Keefe, Bruyette & Wood. KBW lost more than a quarter of its employees in the World Trade Center attacks in 2001.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Overall, the balance of risks to the euro area growth outlook is seen to remain on the downside. We decided to maintain our monetary policy, to maintain our accommodative monetary policy, and certainly under current circumstances, it is very likely that the full envelope of PEP will be used for the purpose of developing those policies. We do not target exchange rate. Our mandate is price stability. And clearly, to the extent that appreciation of the euro exercise negative pressure on prices, we have to monitor carefully such a matter. The strength of the recovery remains surrounded by significant uncertainty, as it continues to be highly dependent on the future evolution of the pandemic and the success of containment policies.
Well, that was the ECB President Christine Lagarde at the press conference yesterday. Still with us, Andrea Iannelli from Fidelity International. Andrea, there seems to be this, belief in the market right now that maybe President Lagarde could have been a bit stronger to condemn the strength in euro, or at least how quickly it rose. Do you agree with that? How much would that have changed?
No, I think they could not ignore the fact that the euro strengthened considerably over the last few weeks and months, and it is part of what they monitor for the purpose of their own mandate of price stability and inflation. Philip Lane actually was quite a lot more vocal around the currency, and in general, a stronger currency does tighten financial conditions, does lower inflation expectations. So they have it on the radar, and it's part of the things that will drive their decision going forward. If the euro keeps going up, chances are we're going to see an ECB that will become more and more vocal about it.
Andrea, again, what does that mean for how the ECB is handling the crisis overall, and where you see value in European fixed income?
So the ECB, like other central banks, will remain in place as a strong actor supporting markets. What does this mean for fixed income? It means very tight ranges in government bond yields, with real yields likely to remain firmly in negative territory. And in general, that is very supportive for risky assets overall. For fixed income in particular, credit markets will be the new home for savers looking to place what is a larger and larger stock of saving to generate an income. So European fixed income, such as European investment grade credit in particular, but even more so at some in given valuations in the high yield space, where defaults are not really rising despite the COVID as much as we would have thought, despite the COVID crisis, are areas where we have a very strong view on at the moment.
Andrea, we did have stronger words actually on euro strength from Mr. Philip Lane, the chief economist of the European Central Bank. I mean, he actually warned that the euro's appreciation this year has dampened the inflation outlook. So do you think that they'll step up their rhetoric and actually do something about it?
Well, they're not going to do currency intervention or such, but it will just prompt them to be more and more active in terms of keeping real yields low to make a long position in the euro, if you want, the more punitive from a carry perspective. As I mentioned, the strength of the currency is part of the things that they have to look at in terms of financial conditions and inflation expectations. So it will be a driver, like it has been in the past, and the ECB will continue to be even more and more active. We expect an expansion of the purchase program between now and the end of the year, and this is a cycle that is unlikely to be broken in the immediate future.
Thank you so much for all of your insight. Andrea Iannelli there, Fixed Income Investment Director at Fidelity International. Now, coming up, a crack in the glass ceiling. Jane Fraser is to become the first female chief executive of a major Wall Street bank. Details next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get another one of our top stories. Citigroup has named a new chief executive. Jane Fraser will become the first female to lead a major Wall Street bank, succeeding Michael Corbat, who's retiring in February after more than 8 years in the top job. Now, for more on this new appointment, we're joined by Candice Zacharias, Bloomberg's Asia Finance and Investing Managing Editor. Candice, thank you so much for joining us. What does the appointment actually say about how far Wall Street has come on gender issues?
Hi, thanks for having me. I think it's certainly the case that Citigroup has made history with this announcement. And this is part of a creeping change that we're seeing across corporate America. 31 women already lead S&P 500 companies, so it is great news to see that a woman will be in the top job of a powerful Wall Street bank. At the same time, I have to say that her presence also emphasizes just how rare the situation remains. The finance industry in the U.S. and really in much of the world still has a long way to go to reach both gender equality and pay equity. And that's not just the case with the CEO roles, but equally about the ranks of senior management. If you look at the top groups of influential operating teams that oversee the 6 biggest U.S. banks, only JP Morgan has an even gender split. When it comes to the board, Fraser's appointment will make Citi the only bank that is evenly split by gender among S&P 500 banks. So this is, I think, certainly going to get folks asking more questions about what's next for JP Morgan or Bank of America or Morgan Stanley or any of the number of other banks.
So, Candice, what kind of experience does Fraser actually bring to the job?
She came to Citigroup after stints at Goldman Sachs and McKinsey. She's had international experience. Her star has risen very quickly since she joined Citigroup in 2004. She's had experience running the strategic team, mortgage unit, and consumer bank. And these are all areas that will take center stage as the lender faces loan defaults and the broader fallout of the coronavirus pandemic. Her old boss, Vikram Pandit, said in an email yesterday that she's demonstrated over the past decade that she can manage.
Position closed on Japanese yen at 106.203.
Candice.
Well, as I mentioned, there's obviously the fallout of the pandemic to navigate, and that's as true of Citi as it is for the banking industry anywhere in the world today. But even prior to that, and despite its immense network in both consumer and investment banking, Citi has repeatedly missed its own targets for boosting profitability, and it trails some of its biggest peers. Earlier this year, it abandoned a target for improving return on tangible common equity, a key measure of profitability, and its stock price remains less than a tenth of what it was before the 2008 crisis. So while today, I should say yesterday's news is great news, I think Fraser really has her job cut out for her.
Candice, thanks so much. Candice Zacharias, Bloomberg's Asia Finance and Investing Managing Editor. Now, coming up, how can global capital help fund the transition to a low-carbon economy? We'll ask Marissa Drew, Chief Executive Officer of the Impact Advisory and Finance Department at Credit Suisse. That's coming up next, and this is Bloomberg. another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Europe has overtaken the US in terms of new coronavirus infections. The EU, Norway, Iceland and Liechtenstein reported more than 27,000 cases on Wednesday, compared to just over 26,000 in the US. The region has re-emerged as a global hotspot after bringing the pandemic under control earlier this year, with resurgent infections in countries including both Spain and France. Now, Rio Tinto CEO is stepping down amid concerns over the destruction of Australian Aboriginal heritage sites. Jean-Sébastien Jack came under investor pressure to step up its response to explosions that opened up a mining area at the 46,000-year-old sites, which archaeologists say are among the most significant of their type in the country. Jack will remain in his role until the end of March next year if no successor is appointed by before then. And England's football teams take to the field this weekend for the start of the Premier League, but it's unclear when spectators will actually be allowed back. CEO Richard Masters says he hopes there'll be a small number by at least October, but without fans, he sees the world's richest football competition taking a hit of about £700 million. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now let's talk all things green and how can global capital be mobilized to fund the transition to a low-carbon economy. Well, that's one of the solutions sought in a new paper by Credit Suisse and the Climate Bonds Initiative. According to the research, well, capital flows have until now been directed at activities which are already green. It calls for changes to debt markets to give confidence to investors, clarity for bankers, and credibility for issuers. Well, I'm delighted to be joined by Marissa Drew, Chief Sustainability Officer and Global Head of Sustainability Strategy, Advisory and Finance at Credit Suisse. Marissa, thank you so much. You've done so much work to really try and capture the essence of what the financial services can do to try and transition the economy. Talk to me about this new paper. What do you need next from authorities and regulators to make sure that finance adopts it even further?
Well, the genesis of the paper, Francine, was a recognition that there was a gap in the market. We already today have a $1 trillion green bond market, which is very dedicated with use of proceeds transactions that are geared toward green. But at the same time, we were seeing the regulatory community asking the capital markets practitioners to really accelerate the finance of the corporate transition. So these are the high carbon emitting industries. It's widely recognized we must, in addition to financing alternative energy, we've got to finance this corporate transition. And so this paper set out to create a framework and a discussion to develop a common set of principles and industry adopted standards in order to create a transition bond market that would sit side by side with the today green bond market.
So how do you get the market to actually adopt this?
Well, we started by trying to take the lessons learned from the scaling of the green bond market and apply those to this transition concept. But it's hard because it's pretty clear what is already green. But in the transition discussion, we want to make sure that we're setting out a rigorous set of standards for what a transition means. And today, in the absence of a commonly adopted framework and set of principles, we see a number of transition-labeled issuances coming out, but they're self-labeled issuances. And when you have these idiosyncratic issuances with labels that are not widely adopted or understood, and that is going to be a limiter on the market's ability to scale. So the idea here is that we have used science and we have used academia to underpin the thinking on the principles, and then we have solicited input from all sorts of practitioners and stakeholders, whether it be thought leaders, academics, scientists, bankers, and so on, to give us feedback on the first cut at this paper. And now we've launched it this week officially into the market, and we are seeking further input and a real sort of consultation from all the other stakeholders that would have an interest in this and interest in seeing the market scale to give us their feedback. We'd like to incorporate that and then ratify this and then get it out into the market. So that's the plan.
Marissa, this is also hand in hand with what, some of the things that the EU will do on taxonomy and things like that. But how is this different from the transition bond market?
Well, it actually is, what we're trying to do is, it is part of the transition bond market. So the EU is certainly, they have taxonomy for green. They're exploring the taxonomy as well for the concept of transition. And we want to work hand in hand with the prevailing best practice. So we will be incorporating that as it comes to pass into the thinking on the framework, but we wanted to get started and really get the ball rolling so that we can invite in all of those, not just the regulatory community, but all the practitioners to give us feedback so that we have something that is very robust and can be a market-adopted standard.
Marissa, how do you deal with possible greenwashing? So this is, one of the things that comes up in conversations time and time again when you talk about, green investment is, how do you avoid people, signing up to stuff and then not delivering? Yeah. So this is, in some respects, a response to a fear of greenwashing, because if there isn't a commonly adopted standard or metric or terminology for what green or transition looks like, it certainly could open the door for less than well-intentioned actors or those who really aren't robust in how they're looking at it. So we have 5 principles that underpin the framework. Number 1, for a transition to be credible, as we call it, and then ultimately be qualified to get this label, number 1, you've got to be in line with the Paris trajectory. So you have to have a clear path to 1.5 degrees. Your transition has got to be underpinned by science. We do not count offsets, because offsets in some respects is just moving the buck to somebody else. This has to be a net zero economy that we're striving for. And we say that technology trumps economic cost, in the sense that if there is a viable pathway, it may come at a cost, but we can't use the excuse that it's more expensive to go down that pathway as a reason not to do it. We have got to move these companies quickly. And then finally, the action has got to be backed up by hard metrics. So we can't have promises that have no substance. So if an issuer meets all of those with their transition plan, then in our minds, they would qualify for this transition label. And the transition label is something that would apply. We want this to apply not just to use of proceeds transactions, but to whole entities. So as we see, as an example, BP next week is going to be on the road talking about a wholesale corporate transition to a cleaner energy company. And it's these types of transitions that we want to support and finance. There's going to be needed over $100 trillion to be invested into the energy sector between now and 2050. And what we'd like to see is that the investment is going toward the greener solutions, so that ultimately we really can achieve this net zero target by 2050. That's the real goal here. And Marissa, I want to talk to, a bit about what you see in terms of demand from investors. So ESG products have significantly increased the demand for them. I know you've just also launched the Ocean Engagement Fund in partnership with, I think, the Rockefeller Asset Management. But in general, do you feel like investors want to be invested in more specific products like this? Do people say, right, I want to put something in oceans, I want to put something in solar?
It's a great question. I think in general ESG strategies, so those that take into account environmental, social, and governance characteristics into their investment thinking and investment strategies, that has just exploded, and we've seen an enormous amount of capital come into these strategies, even in the depth of the crisis and through the recovery. But increasingly, we see investors also wanting to go further than that and align their capital thematically with the things that they care about. Particularly on our private client side, we see that a lot of these topics, whether they be social or environmental, are quite emotive and elicit a passion from the investor. And so the response of this Ocean Engagement Fund is very much one that is meeting a demand or request for our clients, particularly the next generation of our private clients. You know, thanks to you in the media, you've kept the topic of ocean health and the plastics equation very, very much in the spotlight. And a lot of our clients come to us and they say, I'm passionate about trying to be part of the solution here. And how do I get involved? And how do I get involved beyond philanthropic donations? I would really love the ability to align my investing with these passions and these things that I care about. So this Ocean Engagement Fund is the first of its kind, we believe, that links engagement with impact. And we're thrilled to partner with Rockefeller Asset Management, who's had a 40-year track record in engagement very successfully. And through their engagement, they have demonstrable performance that comes with the companies who are responsive to the topics that they have surfaced as ones that they think will create real value if the companies are willing to engage. And so the idea behind this fund is that we will seek out those companies who, through engagement, we believe can be better stewards of ocean health. Mm-hmm. We're very excited to go down this journey with such a credible partner as Rockefeller.
Marissa, thanks so much for joining us today. Marissa Drew, their Chief Sustainability Officer and Global Head Sustainability Strategy Advisory and Finance at Credit Suisse. Now, we, of course, remember that morning of September 11th. You're looking at live pictures of Manhattan. As the city wakes up, we'll bring you full coverage of 9/11 memorial events throughout the day. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now, as investors watch for comments from several ECB officials later today, we'll focus in on the future of high yield and leveraged finance. Well, our next guest is taking part in the JP Morgan European High Yield and Leveraged Finance Conference, which is being held remotely this year. We're delighted to be joined by Klaus Hesberger. He's the JP Morgan co-head of Strategic Investor Group. Mr. Hesberger, thank you for joining Bloomberg Surveillance. First of all, what kind of market are you looking at? Who has the most cash to deploy, and are they ready to spend it?
Yeah, good morning, Francine. It has been really busy throughout. I think the interesting difference to the last crisis is that nowadays private equity industry as a whole has around 1.5 trillion of equities under management or available to invest, which is more than double the amount we had in the last crisis. So the sector has been pretty busy.
So what does it mean for the IPO markets? Is there a race, actually, Klaus, to do things done before we see more volatility, or before we actually see the U.S. election, which is about 50 days away?
Of course, the low interest environment is a good driver for equities, and therefore, of course, IPOs, especially of growth stories like you see in the tech space, are using this window to go to the market because investors, on the one hand, get low yield on the debt market, they want to get return, and that's why it was a nice opportunity for the IPO market to come back. The other factor which is helpful also for my private equity clients is that the volatility is still relatively low, and you see continued success of transactions. You might have seen we launched a sizable transaction in the UK last week, which is going well, and more transactions are expected to come. But it's not only IPOs, it's also minority transactions and also private equity funds thinking about launching other transactions again.
Yeah, and I was going to ask you actually about private equity. I mean, are there any specific sectors where PEs, private equities are trying to focus for the next round of buyouts?
I would say they're focusing across sectors. Of course, they're looking at corporates who have to divest assets where they can provide added value or do the technology transition. They're focusing a lot on the tech space, but valuations have come up, and also on the healthcare space where a lot of investments is coming in. So I would say they across, when I look at our exit pipeline, it's around 40% on the more industrial, DI, business services space, 30% tech, and the rest consumer retail and healthcare. So you see a broad distribution across sectors.
Do you see, Klaus, private equity firms actually struggling to raise the financing needs they need for large deals because of more caution out there?
No, the good news is they have more firepower than ever. So I think liquidity is probably not a problem. And you see on various situations also those funds doing it them alone. So you don't see so many big consortium anymore. Most of the deal maximum have two GPs, and then they get the support of LP. So dry powder or liquidity is not the problem. It is probably more a scarcity of assets available, especially on assets which they want to buy, and B, probably some of the carve-outs which we're expecting to come out of the corporates being slowed down through the recent events. But otherwise, liquidity or dry powder is not an issue for them to do big deals.
So you don't see PE, for example, having to use more equity for buyouts?
It's a good thing, as we have seen over the last 3 days in our conference, debt markets have also been on fire before the summer and have first tightened the last 4 weeks, so we're 50 pips even tighter, and we were back in May already to the levels we had pre-crisis. So debt markets have been pretty supportive, as you saw in the most recent deal making. So I wouldn't say debt is a problem, also as you saw in the most recent announcement and in the deal flow where a lot of the sponsors who did acquisitions were all able to go to the market and de-risk those situations.
Klaus, how do you see the next 3 months evolving?
Yeah, the next 2 months, I'm quite bullish because on the one hand, you see companies who have done well throughout the last 6 months being ready for exit. So there is a lot of transactions to happen. Secondly, the IPO market has been quite strong. So also here, people are thinking about floating companies. And thirdly, what is also different before, we see new funds like infrastructure funds and also family office and minority funds being active. So I expect much more deal flow over the next 3 to 6 months than we have seen before.
How different is this crisis from 2008? Is there a danger that we're going to see defaults or companies in trouble that are actually healthy?
Yeah, the good news is in the last crisis, and I have also seen the crisis in 2000, so for me it's a third crisis. The big difference here is in the last crisis, all the private equity funds had spent all their money, and then they went into the crisis, so they couldn't help various of their assets, so it took them longer. In this crisis, most funds have enough cash that can support them, and also have dry powder available to do also new transactions. So I'm less worried here. And the other factor which is helpful is there was not such a big leverage in the market like we have seen in the last crisis. So debt markets have also been quite supportive. So I'm quite bullish here. Question is, of course, always the bid ask on valuations, where probably good assets are quite expensive, and for the assets which are not trading so well, people are not focusing so much. But I'm not bearish on dry powder and liquidity.
Klaus Hesberger, thank you so much for joining us today. JP Morgan co-head of Strategic Investors Group. Now, coming up, Blackboard seat matters. Kanye West takes to Twitter to call out companies he collaborates with on lack of representation. More on that next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, next week is going to be a big one for central banks, so let's take a look at what's coming up. On Wednesday, the Fed holds its last meeting before the presidential election. We'll also get Brazil's rate decision, and then on Thursday, we'll hear from the BOJ and the Bank of England. Also on Thursday, we could see a rate cut in South Africa after GDP shrank an annualized 51% in the second quarter. Indonesia and Taiwan announced their decisions as well. On Friday, we'll get further details from the Bank of Russia. Now, let's talk diversity, and Kanye West has taken to Twitter to address the lack of black representation in boardrooms, specifically naming Adidas and Gap, who the rapper has partnered with. Now, for more on all of this, Jennifer Zabazaya, our Bloomberg Quick Take reporter in New York, joins us with the very latest. Kanye West, good morning, first of all, but Kanye West is calling these companies out. What's he actually saying?
Yeah, so good morning, Francine. You know, Kanye West has lucrative deals with both Gap and Adidas, but he's again calling out the fact that he still doesn't have a seat on the board. So on Twitter, on Thursday, he took to Twitter to call them out, referencing the Black Lives Matter movement by saying in part, Black board seats matter. Now, Kanye's deals with the company, his line Yeezys with Adidas and his upcoming apparel line with Gap, gave both companies quite a boost, and he knows that. And he's actually threatened to walk away from the partnerships previously if he wasn't granted a board seat. So this is significant, especially given the fact that companies are facing increasing pressure to diversify their boards and address systemic racism. Adidas even faced some heat from internal employees for their handling of diversity-related issues. Still, though, Gap and Adidas have pledged to step up representation of underrepresented groups without explicitly mentioning their board makeups. And just a final note, Francine, you know, in 2019, Black directors made up only about 10% of board seats, so there's still a long way to go, and you can only anticipate that Kanye is going to continue to speak out on this.
Jennifer, earlier this week, we also heard that the rules for awarding Oscars changed to drive diversity in the industry. What have we learned?
Yeah, so this came just about 5 years after all of the lack of diversity within Hollywood came to a head with Oscars So White. So the Academy put forward their new rules for Best Picture nominees. So beginning with the 96 Academy Awards in 2024, Best Picture nominees will have to meet 2 of 4 specific diversity requirements, either on screen or off screen. Now, this reaction to this was really mixed in Hollywood. Some people said it's progress, we're moving in the right direction. Other people were pretty critical and said that this is going to stifle artist creativity. Others said that this doesn't go far enough. Specifically, I wanted to mention Dr. Stacy Smith of USC, who did commend the Academy, but said we're still not seeing anything that's going to push the conversation forward. And I mentioned Dr. Smith because she has an annual report on diversity and inclusion within Hollywood, and the latest report came out just a few days ago, and it's still showing progress, quite slow. But the Academy leadership is really hoping that these reforms really help create lasting change. And, you know, they're mirrored off of something that the British Film Institute actually instituted back in 2014. But a recent report actually found that even those rules didn't do much to address racial inequality. So we're really going to have to see where this goes and how this debate plays out into award season. Francine?
Jennifer, thank you so much for all of the update. Jennifer Zavajaya there, our Bloomberg Quick Take reporter in New York. And you can catch all of our coverage from around the world. Please tune into this week's Bloomberg Quick Take show at 6 p.m. UK time tonight on Facebook and on 6 p.m. UK on Sunday on YouTube. Now, this is what we're looking at overall. The market really focusing on what we heard from Christine Lagarde of the central bank yesterday. A lot of the focus is also on the Brexit talks, the fact that they haven't been going so well, and that's meaning that a lot of stocks in the UK, but also the pound is under pressure. So I'm looking at pound. It's still down. Core European bonds are gaining. Treasuries are pretty much steady. Now, traders will, of course, be closely watching comments from the ECB officials after Christine Lagarde spurred a rally in the euro with relatively mild comments on another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television. Heading for a chaotic split, the European Union is giving Boris Johnson until the end of the month to back down on his controversial Brexit bill. A crack in the glass ceiling while Citigroup names Jane Fraser chief executive, making her the first woman to run a major Wall Street bank. And exits at Rio. The miner's chief executive and other senior figures are to leave amid pressure over the destruction of Australian Aboriginal heritage sites. Well, good morning, everyone, and this is Bloomberg Surveillance. I'm Francine Lapin, London, Tom Keane in New York. Tom, it's also been 19 years, of course, since that horrific day on September 11th. I know we'll have tributes throughout the day.
Well, very different 19th anniversary, 19th remembrance of September 11th. And Francine, of course, it is about the pandemic still affecting New York City as London. And also, it's about the election year. It'll be interesting to see the visibility today of the President of the United States and, of course, Vice President Biden as well. We'll have our usual treatment here. And, of course, Mike McKee will join us.
Yeah, I'm looking forward to that. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, President Trump won't extend the deadline for TikTok's U.S. operations to be sold. The president says if the video app's Chinese parent ByteDance can't sell the U.S. unit by September 15th, it will be shut down. Trump administration officials have been debating whether to extend the deadline. Bloomberg learned that a deal is unlikely by next week because new Chinese regulations complicated negotiations with bidders Microsoft and Oracle. The FDA is telling drug makers they'll have to meet a higher standard for an emergency authorization for a coronavirus vaccine. The agency will require more data than usual about how well the shot works. Career FDA officials are trying to reassure the public they will not give in to political pressure to approve a vaccine prematurely. And the chances are rising of a chaotic split between the UK and the European Union. Prime Minister Boris Johnson's government turned down an EU request to scrap his plan to rewrite the Brexit divorce agreement. That risks jeopardizing efforts to get a trade deal between the two sides before the December 31st deadline. And President Trump and Joe Biden will mark the 19th anniversary of the 9/11 attacks in the same place, but not at the same time. The president will attend a memorial service near Shanksville, Pennsylvania, where one of the hijacked planes crashed. Biden will go to Shanksville too, but not until later in the day. Pennsylvania is one of the battleground states. Polls show that Biden has a narrow lead there. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Futures up 27 right now, make it 26 points. Dow futures up 145. A nice lift yesterday, then boy, did we give it up at the end of the trading session, and we get a bounce off that give up right now. The VIX 28.48. Other than that, it is fairly quiet out there with a 10-year yield, as John Farrell's mentioned, at 0.70 has been a center tendency, and right now at 0.68%. Francine?
Yeah, the British pound still heading for its biggest weekly drop since
yeah.
March, as you know, the Brexit talks are difficult. So I would point to that. I'm looking at core European bonds. They're pretty, you know, they're gaining actually. Treasuries are steady, but there's a couple of things going on with European bonds. This goes back to what the ECB did yesterday and the fact that President Lagarde somewhat spurred a rally in the euro, Tom, after she delivered relatively mild comments on the currency surge. But the chief economist, Philip Lane, set a tougher tone this morning, possibly signaling that more monetary stimulus is actually needed. So let's talk about all of this, the ECB and euro, with Themos Fiotakis. He's at Glenpoint, Capital Head of Research. Themos, great to have you on the program. First of all, when you look at the ECB, was the ECB a little bit too relaxed about strengthening in euro?
Good morning and good to be here. Good to see you again. I think that they repeated their usual mantra about how the ECB views the euro as an input to inflation. But the main question around that is and remains, what are you going to do about that? They don't have a lot of tools to deal with it. They cannot really take interest rates much lower from here, and they cannot do anything about the fact that the dollar is weak at this stage and will probably remain weak as long as Fed's forward guidance remains in place.
Okay, but does it actually hurt their inflation forecasting?
It hurts probably for the next year. But I would note that the euro has been going up together with the market's long-term inflation expectation. So in terms of what is driving the euro move, it's the recovery. And it is a lot of the tools that they have put forward, like the PEP, that has helped that recovery, that continues to fuel, a steeper curve expectations or recovering in break-even inflation rates, which go hand in hand with the higher euro. So I don't think it's a big issue, to be honest, for them, unless it was to accelerate really sharply here to a rate that is much higher than where it is today.
Tim, it's wonderful to have you with us today. One of the things I noticed here, a real subtle point, is a Federal Reserve System that has staked out the theoretical territory of saying, let inflation happen, and then we'll do something about it. And yesterday, the ECB making the distinction that they're not worried about inflation happening. When inflation turns, they will do something about it. How far apart are the two banks theoretically?
I think quite far apart. I think the theoretical framework of the Fed is at the moment a lot more robust in terms of what it is trying to achieve, both in terms of how they're laying out the new mandate, which I don't know if you saw the papers, Tom. I know you're an avid reader of these things, but a lot of the papers that describe how this new average inflation targeting regime works during a recession imply that there's a long look-back window where they are allowing inflation to overshoot in ways, in compensation for low inflation in the past. Whereas in Europe, you have a mandate that it brings inflation below 2% as opposed to above 2%, and you still have a lot of voices that are skeptical towards more stimulus. So I think the Fed has made a lot more progress than the ECB on a more inflationary mandate.
Is the reticence on a defined look back the Bundesbank speaking?
To a large degree.
See, Francine, how he does that? He gives us those lengthy answers. See how Timos does
They're
that?
perfect for TV, Tom. It just means you have to think, think of more follow-ups, Tom.
Well, let me follow that up then.
No, I think that's spot on. I think that's spot on. You hit the nail in the head. I think that there's part of the ECB that feels uncomfortable with not only a higher inflation target, but also the tools to get there. I think that there's this notion, even among some dovish countries as well, that you cannot bring interest rates much lower, and that's fair because it hurts the recovery. And then there's the notion that for some reason, in some way, shape, or form, QE is creating an insurmountable amount of distortion, which is, in my opinion, is complete nonsense. And it has been even, it has even created political issues with the Constitutional Court. So we all know where the problem lies, basically, right? Some parts of the ECB are worried about the expansion of monetary base as if this is the 1970s or something.
But do you believe, Themos, if you look at what the Fed has done and the announcement Jackson Hole and how they look at inflation, are we going to see something similar do we have to see something similar from the ECB?
I think that gradually more and more central banks will try to follow the Fed's example. Even if you look at all past cycles, the Fed tends to lead the way in terms of innovations. And this has been an innovation they have preparing us for a long time, so it comes as no one's surprise. So a lot of these reviews that are taking place probably will reach a similar conclusion to the degree that they can actually force any kind of change that doesn't clash with the constitutional mandate, because obviously there's institutional mandate issues for the ECB as well. So I think that more and more central banks, not just the ECB, but central banks in the emerging world, which face now steeper curves and expectations for higher rates in the years ahead, will probably gradually adapt to a framework like the Fed, which is much lower for much longer, I would characterize. One exception could be the Bank of Japan, that in their own framework review concluded that there's not much more that they could do about it a few years ago, but remains to be seen as well.
Themos, what happens to dollar from in the next 12 to 18 months?
I think dollar should be a lot weaker. It's not just the Fed, which is innovating here with a framework which is not apparent today, but it will become apparent once we have reduced the unemployment rate to 4%, and once you have inflation rates which are now closer to 2%, and they still remain dovish relative to their commitment. That's the point that it will become the most apparent what the Fed is doing. But it is also the fact that the U.S., because of lower oil prices, because of the extraordinary amount of stimulus, because of the fact that the recovery has been speedier than other counterparties, they will face a very large trade deficit. Already the trade deficit in the U.S. is the largest since 2006. And that imbalance, which is building up, it's the first time we're looking at it, in the last 12, 13 years. The last time it showed up, it was a major dollar weakening factor. So both the fundamentals and the policy response around those are consistent with a weaker dollar going forward, in our view.
All right, thank you so much. Themos Fotakis there of Glenpoint Capital. He stays with us, and we'll talk a bit more about the emerging markets. Now, coming up in the next hour, the Portuguese Finance Minister, João Leão. That's at 6 a.m. in New York. That's 11 a.m. in London. And this is Bloomberg. has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Keene in New York on this September 11th. We'll have much more on this remembrance later. Right now, Themis Viatakis with us with Glen Point Capital. Themis, we've been focused on Europe, the dynamics of the ECB. Right now, let's focus on the dollar. There was such a certitude, 3 weeks ago, 3 months ago, of a weaker dollar. I see DXY, the major index, 93.15. And real dollar stasis. Let's start with the resiliency of the dollar. Why has it been relatively resilient versus the punditry of a weak dollar?
I think there are a couple of things that you're capturing there. The first one is that the dollar depreciation has happened in a very staggered way when you look at the cross section of currency. So the dollar has been very weak against the Aussie dollar. The dollar has been weak against the euro. The dollar has not been exceptionally weak, except for the very first parts of the recovery against emerging market currencies, for instance. And this is because in a lot of countries where the dollar is affecting the monetary policy reaction function, they have been quite dovish. But to me, one of the main factors that has been inhibiting a broader and stronger dollar move to the downside is Asian currencies, and particularly the Chinese exchange rate. I think that it's very hard to fathom a very sustainable dollar move without dollar China, dollar Korea, dollar Taiwan, dollar Singapore, all of these guys moving firmly, and all of these guys are looking to the CNY for leadership. And the CNY has been resisting this move to a large degree and lagging, and possibly for a number of reasons, both linked to the recovery, but also linked potentially to the politics around the exchange rate.
Well, the politics can be there, but it does come down to interest rate differences and also capital flow differences right now. Which will win out in the next 6 months?
Look, I mean, when you look at China, where I was focusing, the level of yields there is extremely high, both historically and in absolute terms relative to the US one. So interest rate differentials, check. Capital flows have reversed with a lot of the outflow that you used to see from China to global stock markets now becoming a more comfortable Chinese investor investing domestically. So check. So I think you need the policymaker to allow that. Now, you also make a separate point, which is very important, around the broader capital flows. And I think emerging markets in particular have not experienced the kind of capital inflow that you have seen, let's say, in U.S. equity markets. And that's an affliction that's been going on for a couple of years now. I do think that that should change over time as the recession fades and as the recovery broadens, not only to the U.S. reopen, but to a global reopen. As these economies reopen, performance of assets will be stronger, capital inflows will follow that.
But Themos, economies will reopen and then close back down and then reopen again. What kind, there are sectors that actually just won't recover from this for a while.
Yes, and this is why the timing of the vaccine is very important, right? There's a lot of indicators, let's say, that, a lot of people are looking at the odds that the Good Judgment Project is showing to a vaccine being delivered at this end of the year. I think that to the extent that markets can actually look forward to a vaccine being delivered reasonably soon, they're willing to wait out whatever lag it takes to fully reopen those economies. As long as there's a path to reopening fully reasonably soon, backwards and forwards movements around the reopen or the timing are going to be secondary to the broader trend.
Themos, where do you see the biggest concern about a second full lockdown? I mean, I know, you know, what you do is economics and research and markets, but sometimes it feels like the markets is so focused on a vaccine and not really ignoring some of the default possibilities.
Yeah, I mean, look, you have seen countries, for instance, like Indonesia, over the last couple of days, where they've been discussing strict lockdowns, and that has had an impact on local assets. You have seen countries like Israel have deep political divides around the necessity and the desire for a second lockdown. But I do think that when it comes to the major, and you've seen the UK as well, right? But I do think that when it comes to the major economies, the desire for a lockdown, a fresh lockdown, is very little.
Thank you so much. Themos Fiatakis, greatly appreciate it with Glen Point Capital today. A briefing here with markets up 30, and again, foreign exchange markets, as I said earlier, just churning. There's no other way to put it over the last number of days. Coming up on Bloomberg Markets, Professor Fisher. He was the Fed Vice Chair, the Governor of the Bank of Israel, and of course, always and forever associated with the Massachusetts Institute of Technology. Stan Fisher awarded the Posen Prize yesterday. Look for that at 11 a.m. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revision.
You still got 1.8 million, with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing, and it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. Tesla plans to ship cars made at its factory in Shanghai to other markets in Asia and Europe. Bloomberg's learned that China-built Tesla Model 3s intended for delivery outside the country will likely start mass production in the fourth quarter. Targeted markets include Singapore, Australia, New Zealand, and Europe. Billionaire Patrick Drahi is trying to end 5 years of share volatility at Altice Europe. He's announcing a plan to take the French telecom company he founded private. His offer values Altice at $5.8 billion. That represents a 24% premium over Thursday's closing price. But it's still far below its recent peak. Drahi already owns a third of the company. And the CEO of mining giant Rio Tinto is stepping down. Jean-Sébastien Jacques has been under pressure over the company's destruction of ancient Aboriginal heritage sites in Australia. Investors criticized an inquiry into the incident led by Rio Tinto's board. And that is your Bloomberg Business Flash. Francine, Tom.
Ritika, thanks so much. We'll do a data check right now. The lift off the markets off the tough close yesterday. Futures up 32. Those levels, there's a mid-tendency to the levels. The S&P 3373, the Dow 27,739, and the VIX comes in. This is important. The VIX just slides in to a less volatile space. 28.25 is a real shift from the last week or so. Curve pretty much stasis. The fixed income market, I'm going to call it quiet. The 30-year bond 1.42%. Again, dollar stasis is well. I'm going to let Francine talk about sterling, because, Francine, it drifts away ever weaker.
Yeah, because just Brexit talks are fraying, and it seems like every day there's more concerning news that could hint at a no-deal Brexit, Tom. So the British pound definitely heading for its biggest weekly drop since March. The other story, Tom, of course, is, you know, there are a couple of officials from the European Central Bank that will be speaking later today, and traders will be watching that closely after Christine Lagarde spurred a rally in the euro yesterday when she delivered relatively mild comments on the currency's surge. So it's interesting. It will be interesting to see how officials will position that. Yeah. We already had, Tom, this morning, Philip Lane, the chief economist at the ECB, setting a tougher tone on Friday, signaling that more monetary stimulus may be needed. So we have that. And then coming up on Bloomberg Markets, so we'll be speaking to Pascal Donohoe. He's the Irish Minister of Finance and Public Expenditure, so maybe he'll have a thing or two to say about euro. That's that interview coming up at 10 a.m. in New York. That's 3 p.m. in London. And this is Bloomberg.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos.
Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital. Al salir, nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
We know it's a pandemic, and we want to be very responsible for pricing. We plan to underprice this vaccine for its value, especially in the pandemic phase.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg Surveillance. Good morning, everyone. On this September 11th, I am Tom Keeney in New York, Francine Lacroix in London as well. We'll have much on remembrances later this morning. Please stay with us on Bloomberg Radio and Bloomberg Television. Futures up 33, Dow Futures up 200. It is a very different 19th remembrance of September 11th. It is a year of pandemic. It is a year of politics. We address politics right now, probably folded right into pandemic, with Elliot Hentoff with State Street Global Advisors, really focused on policy as well. Elliot, I've never bought the idea that policy really matters when people go in the booth. If there is 10 to 14% undecided voters now in America, do they care about your world? Do they care about policy?
Well, I don't know if the voters care, but I can tell you my investors that I advise, they care about policy because policy really does drive economic and financial outcomes. The number you quoted this year is much, much lower. When it comes down to the voting blocks that we're really following, we're not speaking of 10, 14% of undecided voters in the U.S. We're speaking of a much, much smaller group. It's roughly around 5%. And one can wonder, who are they really that they're undecided? I think more likely they're undecided whether they're really going to participate in the election more than anything else. They are not undecided. You are right. At this point, they're probably indifferent to the various policy platforms. And if you think about it, the Republicans and Trump this year didn't even make the effort to write a new policy platform because they realized that policy is not their brand. That's not how they attract votes.
Exactly. Dr. Hentoff, you are really experienced and varied at the foreign policy front. I'm going to suggest certainly on the September 11th, it is far more a focus on domestic issues, including these two candidates visiting Shanksville, Pennsylvania, for our international audience south of Pittsburgh in the southwest corner of the state of Pennsylvania. Elliot Hentoff, what will be the messages of these two candidates in Pennsylvania?
I think the messages really is about obviously the future of domestic development for the U.S. What's the emphasis? What type of rebuilding? What type of nation building do the respective candidates envision? One is, we obviously know what the Trump platform is. Biden will try to contrast that with a much more inclusive, broad-based, also economic renewal aspect. But I think foreign policy does play a role, a big one in this election, because the big difference we'll feel, and also foreign investors will feel, is the ripple effects of potential change of the White House. You have to think the last 3-4 years how much volatility in the marketplace has been driven by impulses coming out of the White House. So theoretically, a change there would be very welcome for global markets. It would probably be really kind of there's the choice between a high and a low vol candidate. And if we're looking to Shanksville, Pennsylvania today, that's really the market perspective of the two foreign policies at stake.
Well, what exactly is at stake with the election? Is it the dollar as a reserve currency? Is it trade war? What are the markets focusing on?
Well, it's surprising the markets have been relatively unfocused on the election thus far. Clearly the pandemic has overshadowed everything else for the right reasons. We see a little bit both on the FX and equity side. In the options market, we've seen that there's elevated uncertainty beyond the election date, meaning that clearly some parts of the markets are worried that we will not get the clarity that we're seeking on November 3rd, or probably not even by November 5 or November 7. But otherwise, markets have been pretty unperturbed. But the election does matter. It matters clearly for U.S. equities. We're going to move from what I call a beta regime, where basically the Trump platform is just good for shareholders of all types. It's just a broad-based tailwind, to kind of a more of an alpha regime where Biden will basically plan to impose tax and regulatory changes that is, rewards some and punishes others. So very much more of a selective investment regime. But globally, it matters. You talked about exchange rates and trade wars. It definitely matters to the degree we are in a weakening dollar cycle now, and that's fine. Every 5-7 years, there's a switch in the dollar cycle. But the question is, do we get a kind of a disorderly path, a volatile path towards a weaker dollar, or do we get a very smooth incremental one? And that's really the ripple effect. Because it's the reserve currency, the dollar really amplifies all sorts of asset prices across other global markets. So it's a key question to think about, and that stems from the election.
Does Hughes in the White House actually have an impact on Brexit? So not the EU-UK negotiations, but actually on UK-US?
Marginally. Brexit, at the end of the day, is a story of structural rigidities. There's few actors that can really move or solve the conundrum there. It does change the optics, because right now the Brexiteers in the UK enjoy an ally in the White House. So at least from the political optics, the political tone, it helps. It helps make their case, and it helps raise the prospect of a favorable US-UK trade deal. Obviously, a Biden administration would probably be less supportive in that regard. But it's marginal. When we're actually talking about asset prices and markets, it matters fairly little. The Brexit will be solved in London and Brussels, nowhere else.
Elliot, thanks so much. Elliot Hentoff there, State Street Global Advisors, Head of Policy Research. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine, Tom. President Trump is playing hardball with the Chinese parent of TikTok. He's refusing to extend the September 15th deadline for ByteDance to sell off TikTok's U.S. operations. The president said if there's no sale by Tuesday, the U.S. will shut down TikTok for security reasons. Bloomberg's learned a sale is unlikely in time because new Chinese regulations complicated talks with bidders Microsoft and Oracle. Another revelation from journalist Bob Woodward's upcoming book about President Trump. Woodward writes that the president threatened to withdraw the U.S. from the World Trade Organization unless the country got more favorable trading terms. That took place in a call with WTO's then leader, Roberto Azevedo. President Trump wanted the U.S. to be designated a developing nation like China and India. Russia, China, and Iranian hackers have stepped up efforts to disrupt the U.S. election. That's according to a report from Microsoft. The company says hackers have targeted both the Trump and the Biden campaigns. It warned that other targets include political parties, advocacy groups, and academics. China denies the allegations and says Microsoft shouldn't be making things out of nothing. And at least 10 people have died in that massive wildfire in Northern California, and 16 others are missing. More than 2,000 homes and buildings have been destroyed. Roughly 14,000 firefighters are trying to put out more than 24 bushfires that are raging from the Oregon border to just north of Mexico. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine Tom.
Ritika, thank you so much. He is a former Chancellor of the Exchequer from a time ago. Lord Lamont will join us on a most fractious moment for his United Kingdom. Please stay with us on this September 11th from London and from New York. This is Bloomberg.
We are not working for a hard Brexit, but we need to have a trustful partner to have a deal. What we are stressing now is that it's up to the British government to work to re-establish this trust.
Well, that was the EU Economy and Financial Affairs Commissioner, Paolo Gentiloni. Post-Brexit trade talks are set to resume next week, despite the UK rejecting the EU's ultimatum to scrap plans to override the withdrawal agreement. Well, joining us now is Norman Lamont. He's former UK Chancellor of the Exchequer, pro-Brexit, of course, and we've had many on the program. Lord Lamont, thank you so much for joining us. Given the state of negotiations right now, what's the likelihood that the UK leaves in January without a deal?
I still think it's 50-50. I thought that before this latest dispute, but I still think there's a possibility of the deal. I mean, I've always thought that before there was a deal, there would be some drama, there'd be some breakdown, people would walk away, and then people would get together and argue it out. It looks difficult, but I still think that's possible. I believe that Boris Johnson does want to have the deal. You know, whatever the maneuvering that's going on, whatever the pressure that's being applied, I think in his heart of hearts he wants a deal.
Lord Lamont, what's the wider impact of the government actually openly admitting that it's planning to break international law?
Well, it was a most staggering thing for the Northern Ireland Secretary to say. Of course, since he said it, the Attorney General has come out publishing some advice and publishing her own opinion, which is much more nuanced. And while admitting that there are some conflicts between the action the British government might take, and its obligations internationally, she is arguing this is not an unprecedented situation. I think it's going to be very difficult to persuade the House of Lords, of which I'm a member, to accept this argument. But I think, you know, we have a duty to listen carefully to what the law officers say, and obviously they haven't signed off on this lightly. But there's one point about the Northern Ireland Protocol that I think isn't made often enough, and that is that although it is an agreement between Britain and the EU 27, it has huge numbers of loose ends, in fact worse than loose ends, blatant contradictions, and it was always going to require some amending and some changing. And I think the British government had a good case in arguing that. It was inevitable that there would be changes, but it's over the method by which it is trying to change it that this latest dispute has arisen.
Lord Lamont, you fought the wars of ERM in the budget wars afterwards, and granted, it was a completely different time and place, and particularly amid higher interest rates. What are your thoughts now on the conservative tack of austerity? How is austerity and budget cutting, the things that you were acclaimed for back then long ago and far away, how is austerity treated now in 2020?
Well, it's a very good question. I think we are in a different world with low interest rates, negative interest rates in some cases. And there are 2 points I would make about it. One, looking backwards, I don't think it would be right to say that austerity in the past was misplaced. It was a different world. Austerity was necessary. And austerity is just another word for living within one's means. As regards today, although the world looks very different, interest rates are low or negative, there can be no 100% certainty that this will last forever. And as you know better than I, the world is divided into inflationists and deflationists. People are not quite sure which way the West is going. Are we going to be following Japan? But for that reason, I mean, if we have deflation, soaring debt will become an unbearable burden. And of course, if we have inflation, interest rates will go up, raising the cost, perhaps the real cost of debt as well. So there is no magic money tree, and I still think we can't just march into modern monetary economics, it is called, and think we've got a cost-free world.
From across the Atlantic, Jeremy Corbyn seems to be an item of history, I guess. Does Prime Minister Johnson risk losing power for the Conservatives within the chaos right now on Brexit? Does he risk at the next go-around giving it all back to the center and to Labour?
Well, we're a long way from an election, 4 years away. I think it's very difficult to see through the mists of COVID quite how things are going to emerge. I mean, I am myself uncomfortable with the level of government spending, but I don't believe that we should be cutting back now or raising taxes now. I think we've got to have a couple of years, a year, 2 years before we address the budget deficit, but I think we should address it. And I hope that Prime Minister Johnson will agree with that. I'm sure that's what Rishi Sunak, the Chancellor, will be pressing him to do. Wouldn't be right to do it now because we've got to let the recovery get a grip.
To make sure, Lord Lamont, that the recovery is taking a grip, would you actually extend the furlough programs?
I'm sorry, I didn't hear?
Would you extend the furlough programs to make sure that we have a robust recovery?
No, I wouldn't extend the furlough program because I think the furlough program is giving a perverse incentive. It is encouraging people to stay away from work. I think we do need possibly a different sort of incentive, perhaps wage subsidies in certain sectors. I mean, other countries like Germany and France have extended their help with the labour market, extended their help to people who are unemployed. But I don't think the furlough scheme in its present form would be the right way to do it. I think a different approach would be needed. I do think we are quite likely to face a very sharp rise in unemployment. The Bank of England says 2.7 million by Christmas. Some people think it could be more than that.
Lord Lamont, thank you so much for joining us today. Norman Lamont, the former United Kingdom Chancellor of the Exchequer in the United Kingdom. Coming up on Bloomberg Markets, as Francie mentioned, Pascal Donohoe, the Ireland Minister of Finance, driving forward this conversation of the moment for the UK and for Europe. That in the 10 o'clock hour. This is Bloomberg. Good morning.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. It's one of the biggest debt deals ever in Asia. Nissan raised $8 billion in its first non-convertible dollar bond sale in at least 2 decades. And now it's begun a public euro bond sale. The fundraising comes after Nissan recorded its biggest loss in about 20 years. The owner of New York sports clubs will file for bankruptcy as soon as today. Talks for the health club chain to get new financing fell through. Town Sports International was negotiating an $80 million capital injection from Kennedy Lewis Investment Management. And brand names like U.S. colleges like Harvard and Princeton are finding love for their bonds from international investors. In a world of falling interest rates, the colleges are providing extra yield. That's helped U.S. universities sell about $36 billion of bonds this year. That's the most since at least 2004. And that is your Bloomberg Business Flash. Tom Francine.
Thank you so much, Ritika. Now, Citigroup has named a new chief executive. Jane Fraser will become the first female to lead a major Wall Street bank, succeeding Mike Corbat, who's retiring in February after more than 8 years in the top job. Joining us now is Bloomberg's Wall Street correspondent, Sonali Basak. Sonali, great to have you on the program. When you look at actually what the appointment means, I mean, she's the first female to be appointed at a major Wall Street bank. Does it mean that the culture is changing, or does it just show how far behind we still are?
Right. I wouldn't get all that excited. I mean, the numbers at the top of the banks have been pretty stagnant. Less than 30% of the executives are women, and most of those women, many of those women are not in operational roles, meaning they're not up for CEO candidacy. And when you look at more than 100 financial CEOs across American finance, 6 of them are women. So the numbers are bad, but Jane's ascent came very quickly. She was named president less than a year ago. And before that, she ran a business that was less than 15% of Citigroup's revenue. So it shows you that you can look more broadly to find a CEO.
That's fabulous ratio perspective, Sonali, really important. Is she going to come in and be the hatchet? I mean, the bottom line is, here it is, folks, line it up. JP Morgan price to book, 1.30. Bank of America price to book, a little lower, 0.90. And Sonali, I know you've got it tattooed to your brain, a completely unacceptable 0.61 at Citigroup. What is the urgency of Ms. Fraser to right the lack of profitability that Corbat has lived with?
The urgency is there. Remember, Citigroup also has an activist investor that is Value Act. And so you can't imagine that their investors are super patient. But with that said, we're in the middle of a pandemic where banks have taken billions of dollars worth of loan loss provisioning, and Citi has a huge global business that's very sensitive to all of that, a big global consumer business. So the urgency is there, but it doesn't look so great that 0.6 point to book has been pretty stagnant since Corbat took over in 2012.
So what, I mean, she, you know, as she takes over Citigroup, Sonali, what does she need to do first?
Listen, the technology issues are a big question mark, right? You know, Jane did take over Citigroup less than 1 year ago. And so while her move to the top was pretty widely telegraphed, the timing is a big head scratcher across all of Wall Street. Why so quickly? Why less than a year? There must have been some. The timing is very interesting. Remember, the technology issues are something that she's going to have to contend with. Citigroup just accidentally delivered about $900 million.
Yeah, I got my check.
Yeah, right. Well, that is something that regulators have been looking at. So she's going to have to deal with improving technology, regulators, but also when it comes to consumer banking, her rivals are investing heavily. So same problem.
Come on, Sonali, look, you got to come back on. You're doing great here. This has been a fabulous report. Sonali, they're way behind in retail, right?
They need to be investing there, but they have to be investing there at a time where they have to keep a clamp on costs. some hat tips here to Jane Fraser. In the short time that she ran the business, she was able to bring over some significant people, right? The creator of JP Morgan's widely popular Sapphire Reserve card, a person who managed the Apple Card portfolio for Goldman, a senior woman at Wells Fargo. It's creating some noise across the industry, and hat tip to my colleague Jenny Serene for breaking a lot of that news.
Yeah, Jenny's article today is great. I'll put that out on Twitter, folks. Shonali Bassick there with an understanding of the why here of Corbat to Fraser. There's lots more to talk about on the September 11th. There will be 6 remembrances today, as there is each year, but this year decidedly different. Because of the pandemic, there will be some major changes in what you'll observe beginning in the 8 o'clock hour in New York City, and of course the services at the Pentagon, and then on to Shanksville, Pennsylvania. In our next hour on America and on our capitalism, Luigi Zingales of the Booth School in Chicago. Futures up 30, Dow futures up 187, the dollar flat. Please stay with us from London, from New York. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This morning, this 11th of September, the resilience of the market. Stocks are bid. JP Morgan says now is the time most of sales and trading, they will return to the office. Citibank says now is the time Jane Fraser must go in search of greater profits. This 11th of September, 52 days to the election, Biden and Trump and Biden, they will pause at Shanksville, Pennsylvania. And this 11th of September, the resilience of New York City, Washington, and America. Good morning, everyone. Bloomberg Surveillance. It is such a different 9/11 this year. Francine, I can't convey the overlay of the pandemic on September 11th, the typical cadence that we have, and how changed it is this year.
Yeah, so Tom, I think you're talking about the memorials, right? In the past, there was always a memorial. There were minutes of silence observed, and because people can't meet in place, we rely a lot on the images, but you don't have people coming together in the usual way that we've seen in the last 18 years.
Well, we'll have to see on that. The memorial pool here, one of the two, I should say, at the 9/11 site. And of course, there will be ceremonies scheduled to attend. Vice President and Dr. Biden will attend. And also, we will see Vice President Pence in New York, Francine, before. Later in the morning, we will look to Pennsylvania. Let's go to our first word news this morning. Here is Ritika Gupta.
Morning, Tom, Francine. President Trump won't extend the deadline for TikTok's U.S. operations to be sold. The president says if the video app's Chinese parent ByteDance can't sell the U.S. unit by September 15th, it will be shut down. Trump administration officials have been debating whether to extend the deadline. Bloomberg's learned that a deal is unlikely by next week because new Chinese regulations complicated negotiations with bidders Microsoft and Oracle. The FDA is telling drug makers they'll have to meet a higher standard for an emergency authorization for a coronavirus vaccine. The agency will require more data than usual about how well the shot works. Career FDA officials are trying to reassure the public they will not give in to political pressure to approve a vaccine prematurely. And the chances are rising of a chaotic split between the UK and the European Union. Prime Minister Boris Johnson's government turned down an EU request to scrap his plan to rewrite the Brexit divorce agreement. That risks jeopardizing efforts to get a trade deal between the two sides before the December 31st deadline. President Trump and Joe Biden will mark the 19th anniversary of the 9/11 attacks in the same place, but not at the same time. The president will attend a memorial service near Shanksville, Pennsylvania, where one of the hijacked planes crashed. Biden will go to Shanksville too, but not until later in the day. Pennsylvania is one of the battleground states. Polls show that Biden has a narrow lead there. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thank you so much. There's a difference in quarantine across the Atlantic. In America, it is maybe this state and that state, maybe a city and another city. And in Europe, it is a cacophony I can't make sense of. Francine Lacroix is expert at the quarantine and has a treasured guest who I guess is knee-deep. He's quarantined for months and months, right? The struggle of staying in northern Italy.
So, Tom, it's actually quite difficult to be on top of these quarantine rules because I have to say they change daily, especially, for example, for the UK. So what happens is that European countries say that you have to isolate for 14 days when you come into the country unless you're on a list of exempt countries, and that list really changes daily. The UK just added 2 more countries in the last couple of days. Before we go to Luigi Zingales, as Tom says, homebound in northern Italy, should we do a little data check, Tom? There's quite a lot going on.
I'm sorry.
In euro.
Yeah, let me do it.
I will get to euro dollar, but let's see what's happening in futures first.
Yeah, on the futures up 29, Dow futures up 180. My fault there not to do the data check. The 2-year yield 0.1390 shows the foot on the 2-year yield. Francine?
Yeah, the British pound headed for its biggest weekly drop since March because of these Brexit talks not going to plan, and that's something that we heard on both sides. And then there's a dispute about Northern Ireland and also euro. I want to show you euro because we are getting a lot more European Central Bank officials talking about possible euro strength after Christine Lagarde yesterday was actually, relatively mild, I would say, on her talk about the currencies surge. So let's keep an eye on that, and let's get straight to Luigi Zingales, finance professor at the University of Chicago Booth School of Business. Luigi, great to have you on the program. We have about a million things that we need to talk about, but actually, if we just start in the crisis, the health crisis that has been transformed into an economic crisis. We've talked in the past about how the world economy and maybe certain things in capitalism needed a reset. Is this an opportunity, or are politicians and regulators in crisis mode and so unable to look at the bigger picture?
More than I think is a necessity. I think that COVID exacerbated many of the tensions and the problems that were there before. And I think if we don't address them now, they would manifest in much more unrest that we've seen so far.
I know you were doing also a lot of work on, whether corporations should have a social purpose. Does this go back to, the idea that we can take this opportunity to try and reset and rethink some of the structure that we've built in the last 50 years?
So it's very special because this weekend is the 50th anniversary of the publication of the famous piece by Milton Friedman, where he stated the only purpose of business was to make profit, and the social responsibility of business was to make profits. And at the Stigler Center, we had a conference in Chicago at panels to remember this, but also to see kind of what stays of legacy and what doesn't stay. And I think that Friedman was very precise, first of all, in saying that this lack of purpose applies very much when it comes to business that operate in a competitive environment. I think it's very important to keep it in mind. The second is he's very strong in saying that you should respect the law and have regulations in place. So we're not trying to say that greed is good here, but it's to say that you want to pursue and follow the law. The third one, which is equally important, is that I think that if you take the perspective that a corporation are just free aggregation of people that delegate the ultimate responsibility to the shareholders to run this association, I think they are the ultimate people bearing the cost of any social responsibility. So they are the one that have to decide. And so in a sense, the principle of separation between social purpose and profit maximization that Friedman advocates is valid. You take the traditional view that we are a contractarian view operation, that this is what people agree, and this is, if you want, manifestation of the American principle of no taxation without representation. At the end of the day, social responsibility tax shareholders, and they have to decide. So this, as far as the positive of his legacy is concerned. What are the limitations? Number one is Friedman ignores that corporations sometimes have a comparative advantage in doing some social activity. In a sense, it's much cheaper not to pollute, and then clean up. When this is the case, as I showed in Little Heart, I think that the separation of Friedman breaks down. And what you should maximize is partly shareholders' welfare. So the other objective that shareholders want to maximize. The second point, which is equally important, is how do you deal with lobbying? Really are trying to maximize profits. I used to say that as a CEO, I should do anything in my power within the law to distort regulation to my advantage. I think this is absurd, and that should be limited, and in a sense, it should limit the ability of companies to abuse that. And then, of course, there is the case that corporations, when they become very large, like Google, or even monopoly, like Facebook and Google itself, then we need to think more seriously what their role in society is, because the Friedman principle does not apply anymore to those corporations.
Luigi Zingales, thank you so much for visiting with us today. Too short a visit, quarantined in Italy as well. Luigi Zingales with the Booth School of Chicago. Francine, I look at all of this, and as it folds into the election, it's going to be an extraordinary 52 days to the election. Of course, Dr. Zingales there with his book on capitalism. And to be honest with you, to me, it's almost overshadowed by what we've observed in the United Kingdom in the last 3 or 4 days. I mean, is it right, Francine, to say it's just simply chaos?
Yeah, it's right. I mean, look, it's chaos for, a number of things. Now, there have been continued talks over the summer months, Tom, but because of COVID, maybe the attention of the media was elsewhere, and it was unclear whether these talks were going okay or not great, but still on track. Now it seems there has been more of a breakdown. What we need to know is whether this is just posturing or, trying to get a better deal, or whether there's a real willingness from the UK government to possibly leave without a deal by the end of the year. And then the second question, Tom, is, the UK for the first time admitted that they were happy to break international law because of the treaty that regulated Northern Ireland, and that, frankly, just changed the tone in negotiations. Something maybe we could speak to with Luigi Zingalis about how all of this, put together is tough, Tom.
Oh, absolutely. Luigi, one final question, if we could, to you. In Italy, do you understand a difference in capitalism between Donald Trump and Joseph Biden?
Yes, I think that Trump is very much what I call a pro guy. He's not necessarily pro-capitalist, but he defends the interest of business people, and that's the reason why he gets so many donations from that side. Biden is more ambivalent because sometimes is equally pro-business like Trump, other times seems to be more interested in trying to create a more fair competitive capitalist, and others even drift into more socialist perspective. So we don't know actually what a Biden presidency will be, because he's basically an anti-Trump. He's everything but Trump.
Okay, Luigi, thank you so much. Too short a visit today with Professor Zingalis. I can't say enough about his book, one of my books of the summer, a number of years ago. He's with the Booth School in Chicago. Coming up, this is a more than timely interview, a conversation with the finance minister of Portugal, our Matthew Miller, and no doubt they will speak of the tensions across the English Channel in the North Sea. On the September 11th, from London and from New York City, this is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, European Union finance ministers are meeting in Berlin as they all struggle with the worst recession in memory. Now, Bloomberg's Matt Miller is there and joins us for an exclusive conversation with the Portuguese finance minister. Matt, over to you.
Thanks very much. Yeah, I'm here with João Leão. He is the finance minister of Portugal, an economist who spent a big chunk of time at MIT. So we can focus in, João, first off on the economic expectations that you have from this recovery. What do you think in terms of the entire European Union? What does the recovery look like to you? And then in terms of Portugal as well?
The European economy was badly affected by pandemic. In the second quarter, when the most severe measures of lockdown were implemented, the GDP fell in Portugal, for example, 16% compared to last year. But now the economy is recovering fast, better than expected, both in Portugal and Europe. But the outlook is still very uncertain and the recovery is not complete. In Portugal, in the summer and the third quarter, the banking sector provides huge support for the economy. Construction is doing very well. Manufacturing is recovering. Tourism is also recovering, but is still quite below last year. In general, the government is putting in place very strong measures to protect farms, employment, and protect incomes of the families. This is helping the economy recovering, and we are, for next year here in Portugal and in Europe, proposing measures to keep supporting the economy. That's very important in this period.
So tourism is huge. You already mentioned it. What can you do when, for example, the UK takes you out of the travel corridor and you see tourism figures drop? I mean, how do you improve that?
Yes, the tourism is badly affected by especially British tourism and outside Europe tourism. Internal tourism is doing very well in Portugal, and tourism from Spain is also doing very well, and high-end tourism is also doing very well in Portugal. Still, the tourism is badly affected. We are putting in place specific measures, not only to support employment in these sectors, but to provide extra demand for these sectors. We are putting in place measures like vouchers, programs that keep incentivize people to go to Lisbon and the rest of the country.
What about the euro? I mean, a euro now costs $1.18, $1.19. Last time there was a horrible European crisis, the currency got hit hard on the downside. Now it's on the upside. I guess in a way that's good. It shows confidence in the currency. In a way, it's difficult for a tourism-based economy.
Yes, so it shows that Europe did like a strong measures that show that to the world that is united.
The rescue package.
And that there is future in Europe, so markets have confidence in the evolution of the European economy. So that's the positive side, as you said, for tourism, especially from outside Europe, like from Britain and the other countries, it is not so good. But the most important thing, Europe is very important, the confidence that the markets are seeing in the evolution of the European economy.
So what do you think can be done about the euro? Do you want to see it a little bit weaker?
As you know, the evolution of the currency fluctuates quite a bit. The European economy is a relatively closed economy for the rest of the world. The share of exports is lower than 10%, but it's still important for us. So for us, the ideal situation will be not to further appreciation of the euro, but also because the inflation rate in Europe is quite low, and further appreciations of the euro will not help to increase the inflation rate.
How would you can you use this crisis to restructure the Portuguese economy in some ways?
Yes, indeed. So part of the recovery has to be put the economy working back to the normal stage, but we also have very important recovery funds coming from Europe, and these recovery funds are going to be used not only to improve in short term the economy, but also over the medium term to help restructure the economy, improving leading to the digital transition, energy transition, and improving the productivity of the economy. So we are going to promote investment to make the economy with higher potential growth.
Let me finally ask you about Brexit. It looks like they might come to no deal at the end. How difficult would that be for the Portuguese economy, so reliant on British tourists?
For Europe, it is a breach of trust because the UK didn't comply with the agreement. And we hope the UK reconsiders and keeps the agreement. It's very important in the end for us to reach a trade deal that is both for everyone. It's very critical for both the British people and for Europe to have a compromise and reach a trade deal.
All right, Joao, thanks so much for your time. Really appreciate it. Joao Leal there, Portuguese finance minister here at this ECOFIN meeting in Berlin. And I believe, Tom, the only Red Sox fan in the building.
That would be true, and that's a very difficult thing. It's sort of like a no-deal Brexit. Matthew, the Red Sox are last in the American League. Matthew Miller, thank you so much from Berlin and from London as well today. This is Bloomberg Surveillance. Coming up on Bloomberg Markets, the Irish Minister of Finance and Public Expenditure on this September 11th from New York City. Please stay with us. This is Bloomberg.
Kama donda kuna naweza kaa na mdhi ama huyo mdhi akatae nikae na yeye juu naona kila mtu anaogopa kukaa na ule msee mwingine anaweza fikiria uko nayo, so tunakibado distance. Lazima nibakishe kiti yangu kama mdhi na kaa peke yangu. Lazima na sanitize pia, najiprotect na laptop before nianze kazi. Lazima ni hizo chuma za ndani zote lazima niziguze na kitambaa na sanitizer. Mask lazima ukuwe na kila time juu kama hakuna customer anaweza ingia kwa gari.
We've tried to sanitize people, we scan the temperature as the passengers board the vehicles. But the challenge comes here when some passengers ignore, they don't accept, they don't wear the mask, so that's been a challenge. We used to carry a capacity of 32 passengers, but for now it's reduced to 15 passengers according to distance, social distancing, and this has caused us loss, plus the passengers too are suffering because of the fare charge that we have a little bit increased.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. Tesla plans to ship cars made at its factory in Shanghai to other markets in Asia and Europe. Europe's learned that China-built Tesla Model 3s intended for delivery outside the country will likely start mass production in the fourth quarter. Targeted markets include Singapore, Australia, New Zealand, and Europe. And the CEO of mining giant Rio Tinto is stepping down. Jean-Sébastien Jacques has been under pressure over the company's destruction of ancient Aboriginal heritage sites in Australia. Investors criticised an inquiry into the incident led by Rio Tinto's board.